First here, environmental groups urge U.S. government to take action on crypto miners. A group of 8 organizations focused on the environment released a statement yesterday calling on different government agencies under the Biden administration to implement new approaches in response to proof of work and other crypto mining operations. On Monday, a group of environmental organizations sent a letter to the United States Office of Science and Technology Policy, urging the White House to enact policies aimed at curbing the electricity use and climate pollution associated with digital currencies that rely on POW. The organizations allege that crypto mining in the United States harms communities by creating an increasing demand for electricity sourced by fossil fuels. This demand threatens supply chains with demand for application-specific integrated circuits and rigs. Crypto mining also creates significant electronic waste, which would not aid the transition to renewable electricity. The Group of 8 has proposed that firms engaged in POW mining be subject to stringent reviews around operating permits to mitigate the harms of cryptocurrency mining, e-waste disposal in large quantities, as well as address claims of noise pollution allegedly caused by mining rigs. In addition, they have requested the Office of Management and Budget's Office of Information and Regulatory Affairs to create a registry for many POW mining operations in an effort for firms to disclose their energy sources and quantities. Just another way to try to regulate this industry. Noise pollution, bad for the environment. You know, I think there's just people that don't want crypto, and so they're gonna take a grab at anything to try to stop it. Other recommendations included the Department of Energy implementing energy efficiency standards for POW miners, with the limit tightened over time. However, the biggest asks seem to be aimed at the Securities and Exchange Commission and Commodity Futures Trading Commission, requesting the financial regulators limit crypto exchanges to listing digital assets that meet certain environmental and electricity standards, as well as push back against misleading claims regarding the environmental impacts of digital currencies. As the crypto space continues to grow, industry leaders and lawmakers have stepped up to address various issues. Financial risks and the potential impact on the environment from Bitcoin mining are among the concerns that have been raised. In April, a group of 23 members of the House of Representatives sent a letter to the EPA expressing concern about the rapidly expanding cryptocurrency industry and alleging that cryptocurrency mining is poisoning our communities. Yes, okay, it's using electricity. There's so many other things poisoning our communities. I mean, if we really wanted to get into it and get technical about it. The Bitcoin Mining Council sent a letter to EPA Administrator Michael Regan in response to the lawmakers' letter, claiming that they had mistaken several key issues. The industry leader placed the alleged misconception on power generating facilities causing pollution, not BTC mining itself. The New York state government is currently considering a bill that would place a 2-year ban on all new POW mining facilities in the state. The Sierra Club and Seneca Lake Guardian have pushed back against mining firm Greenridge Generation Holdings operations at the state's Seneca Lake. So, New York, you know, big, and we talked about that in a previous article about like the greenhouse bill that they were trying to pass. So it's not surprising at all. Again, like I stated, you know, people are just going to be against crypto. It's a new thing. They're like, this is new. It's coming in. It's ruining our environment, you know, what have you. So there's going to get pushback. I'm hoping that, you know, the powers to be within the crypto space come up with a solution. Up next here, altcoins stage a relief rally while Bitcoin traders decide whether to buy the dip. As of May 10th, the crypto and traditional financial markets have been moving in a similar pattern, with traders bouncing back after a recent rout. On May 9th, Bitcoin briefly dipped to $29,730, but it has since recovered. Altcoins typically experience heavier losses in market downturns due to a variety of factors, including thinly traded assets and low liquidity. However, this also leads to larger bounces once a recovery ensues. And here's a daily cryptocurrency market performance from Coin360, so you can see there is a good bit of green there. On May 10th, a number of projects recorded double-digit gains, including Maker, which rose by 15.75%. This increase may have been attributable to the fallout from Terra Luna and its Terra USD or UST stablecoin. Other cryptocurrencies saw major gains recently, including Persistence and its liquid staking token, P-Stake. After Binance Labs revealed a strategic investment in the liquid staking platform, both tokens saw a significant increase in value. Polygon also bounced back with a 14.59% gain. Despite what people believe, the crypto market has not acted as a hedging tool against stock market volatility in 2022. In fact, the correlation between Bitcoin and the stock market has been high. The Dow Jones Industrial Average has been erratic lately, and its value jumping 500 points one day and dropping the next. This volatility is likely due to the cryptocurrency market, which is known for being unstable. And you can see this crazy chart here, BTC USD 1 week chart. Just whoosh. This is from versus the SPX 1 week chart. You can see the difference there. Cryptocurrencies have seen a major drop in value in the past few days, with many of the top coins seeing falls of over 10%. The Nasdaq and S&P 500 have not been immune to the drops, with both indices experiencing small losses. Bitcoin analyst Willy Woo noted that the falls are being driven by fear, with fundamentals taking a back seat. While May 10th's relief rally sent crypto and stock prices higher, market analyst Caleb Franzen posted the following chart, warning about a bearish head and shoulders formation on the S&P 500 chart that could result in the loss of another 500 points. The cryptocurrency market is now worth $1.444 trillion, with Bitcoin's dominance rate at 41.5%. So we dropped down, came up a little bit. That's kind of the theme of crypto this entire year, right? Not many major things. I mean, I know it was tanking Monday, Tuesday. We're up a little bit. Good news. Up next here, public blockchain Kucoin aims to solve high gas fees on Ethereum. DeFi is booming, but Ethereum's widespread usage has highlighted its scalability issues. Congestion has become commonplace on the network, resulting in high gas fees, making it impossible for projects to run microtransaction payments on Ethereum. While Ethereum's high fees and scaling limitations have been a problem, the DeFi space has sought out solutions. One solution has been the use of bridge technology, which routes transactions through a cheaper network. This allows for more efficient transactions and opens up new possibilities for blockchain applications. Kucoin and the KCS community are working together to build a high-performance blockchain that addresses these concerns. KCC will improve blockchain performance and help make it more accessible to businesses and individual users. The white paper outlines how high gas fees on Ethereum can be addressed through a larger ecosystem. In this ecosystem, several different projects and platforms will be aggregated to increase the number of scenarios for KCS, the native token of Kucoin. Kucoin's white paper release is said to have brought the company's team, investors, and angel investors together to form the KCS Management Foundation. This foundation will research, fund, invest, and oversee the resources necessary for developing new Kucoin projects. The Public Blockchain's Proof of Stake Authority, or POSA, consensus mechanism allows for faster block confirmations, which helps to keep costs down. This is made possible by the exchange's adoption of KCS as on-chain gas fees. In turn, this provides community users with faster, more convenient, and lower cost experiences. POSA is also a security and stability improvement. The KCC blockchain is currently in development and will gradually move to EVM compatibility 2.0. This will allow it to be used in a multi-chain 3.0 ecosystem with compatibility across different chains and assets. In order to accommodate large-scale use and development, the KCC blockchain will need to focus on creating suitable infrastructure complete with intra-chain and inter-chain protocols. The KCC project was deployed on mainnet in June 2021. It became the access point to the greater KCC network, which accelerated the inherent value of the KCS token. Within the KCC ecosystem, the KCS token became the underlying fuel for the network, with uses being seen in gas fees. After the release of the KCC mainnet, the team also announced the launch of grants and ambassador programs. The first phase of objectives was successfully completed, including the deployment of a cross-chain bridge. Multi-signature wallets and GoDAO websites were also completed with that. Now, dozens of projects have been deployed on the ecosystem, with TVL on-chain value approaching $70 million and wallet addresses over 300,000. Now, the KCS token is entering its second stage of development. This stage will see strengthened collaboration with the KCC blockchain ecosystem and Kucoin. The team believes that these collaborative efforts will continue to drive variety and future value discoveries. So that is pretty cool. If you're interested in Kucoin, if you utilize that platform, this might be something big, as a lot of people complain about high gas fees on Ethereum. If you've utilized the network, you know what they're talking about. So yeah, definitely take a look, see if this is something that you are interested in utilizing. And up next here, we have the U.S. Treasury Secretary reaffirms need for stablecoin regulation following UST crash. If there's not a day we don't talk about regulation, something is wrong. United States Secretary of the Treasury Janet Yellen called on U.S. lawmakers to develop a consistent federal framework on stablecoins to address risk to financial stability. In a Senate Banking Committee hearing on the Financial Stability Oversight Council annual report to Congress, Yellen reiterated her previous position, calling for a regulatory framework on stablecoins. The Treasury Secretary commented on Terra USD, the third largest stablecoin by market capitalization, dropping to 67 cents in the last 24 hours. Senator Pat Toomey asked Yellen questions about UST, a stablecoin that is not backed by cash or securities. The Treasury Secretary added that it would be appropriate to aim for a federal framework on stablecoins by the end of 2022. Yellen called for bipartisanship among members of Congress to enact legislation for such a framework. What do you guys think? You think that's going to pass? Let's see what the rest of it says here. In her written testimony for the hearing, Yellen said the Financial Stability Oversight Council was working on a report in compliance with the United States President Joe Biden's executive order on digital assets, identifying potential risks to financial stability, as well as any gaps in regulatory oversight. The order called for several government agencies to coordinate and consolidate policy as part of efforts to develop a national framework on crypto. It's only the beginning of regulation, in my opinion. Since becoming Treasury Secretary in the Biden administration in January 2021, Yellen has expressed concern about cryptocurrencies. She has said that many token projects are associated with illicit financing and money laundering. Her recent public statements about policy concerning the crypto space seem to have focused on stablecoins and establishing an appropriate regulatory framework. So we'll see what comes of this. You know, I'm sure we'll be get some updates here for you guys once if this is passed or not, what, you know, they're deciding in regard to this. We always try to keep you guys updated on the laws and regulations that are going on. We're in the United States. I'm sure many of you are as well. So it's good to stay informed on what is going on, especially if you're heavily vested into the crypto space. Regulation is coming, whether that's good or bad. You know, there's pros and cons to it. Leave your opinion in the comments below. Let me know what you think. Up next here, Ethereum rises versus Bitcoin despite market rout. With ETH, will ETH BTC gain 50% by June? That's ambitious. What do you guys think? Ethereum's Ether has grown stronger against Bitcoin in the midst of a crypto market rout. However, can the ETH BTC pair continue to rally in the coming months? Let's look at the charts. ETH BTC gained 5.5% between the May 9th low of 0.0720 and the May 10th high of 0.0759. ETH also rebounded by almost 9.75% against the US dollar, and Bitcoin underwent a similar upside retracement in the same period. The gains across the pairs appeared after a brutal sell-off witnessed across the past 24 hours. The drop sent Ether to its worst level since January 2022, and Bitcoin below $30,000 for the first time since July 2021. The U.S. stock market dropped to its lowest point in 2022 this week, mirroring the situation in traditional markets around the world. While the dollar is at its 2-decade high, people are looking to it as a safe haven in times of market turmoil. The same is true for cryptocurrency stablecoins, which have seen a surge in demand. ETH-BTC has seen major gains in the past few days, which has brought it close to testing its multi-month horizontal trendline as resistance. This trendline appears to be forming an ascending triangle pattern. Ascending triangles are typically trend continuation patterns, meaning that they indicate that the price is moving in the same direction as it did before. There is a rule of technical analysis that states when there is a decisive breakout above the triangle's upper horizontal trend line, traders' profit target should be set to the length equal to the structure's maximum height. So if you're a trader, that makes sense to you. ETH-BTC is eyeing a similar breakout move above its horizontal trendline resistance near 0.110 BTC. The cryptocurrency has surged more than 50% from May 10th's price. Conversely, if ETH-BTC fails to break through the horizontal trendline, it could fall back towards the triangle's rising lower trendline and its 50-week exponential moving average, which would be a 11.25% decrease from May 10th's price. And there is a chart going over all of that there. I'm curious to know what you guys think. Do you guys think that we are going to see some highs? You know, we're going to see a 50% increase by June. That's next month. You know, we have like 3 weeks until then so who knows? Only time will tell. And last but not least here, Talos raises $105 million to become the latest crypto unicorn valued at $1.3 billion. Talos, a cryptocurrency firm backed by PayPal, has reached a $1.25 billion valuation following new funding. Talos has announced that it has raised $105 million in a Series B funding round led by General Atlantic, a major global growth equity firm. The funding will help Talos extend its institutional-grade digital asset platform as well as accelerate the firm's expansion into the Asia-Pacific region and Europe. A number of top firms in both the traditional finance and crypto industries participated in the recent round of fundraising. These included private equity firm Stripes, BNY Mellon, Citi, Wells Fargo, Strategic Capital, investment firms like DRW and SCB 10X, and crypto trading platform Voyager. BNY Mellon's global FX head Jason Vitale has said that his latest investment is a sign of the company's commitment to the future of digital assets. He added that BNY Mellon is among new advisors on Talos Strategic Investor Forum, working to build institutional solutions for the crypto market. This funding round also included involvement from existing investors from Talos' $40 Series A round, which was closed in May 2021. This includes investments from Andreessen Horowitz, PayPal Ventures, Fidelity Investments, Castle Island Ventures, Illuminate, Notation Capital, and Initialized Capital. Seems pretty promising. It looks like they have some good backing behind them, definitely some big companies. Talos was founded in 2018 as an infrastructure technology provider in the cryptocurrency industry. We offer services for trading, settlement, and more. Our goal is to provide our clients with institutional-grade services that are secure and reliable. Talos' partner base covers a wide number of firms in the crypto ecosystem, including multiple exchanges like Binance, Coinbase, and FTX, as well as over-the-counter desks and FX platforms. Talos says its institutional trading volume surged 20 times year over year by May 2022. So if you're interested in getting into Talos, maybe making an investment, utilizing their platform, take a look. Might be a good time. Always, again, do your own research before doing any trading or investing. We are not financial advisors here. Just want to provide you some up-to-date crypto news. That is all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.